From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The Treasury Secretary says the standoff with China is unsustainable. Welcome to the Tuesday edition as Scott Bessent's closed-door remarks prompt a strong rally on Wall Street despite continued uncertainty over tariffs and no progress with China. I'm Joe Mathieu alongside Kailey Leinz in Washington. We thank you for joining us on the early edition here. And also, Kailey, comes despite the fact the IMF just slashed its global economic outlook.
Well, it did indeed. And two of the countries with the biggest downgrades, the U.S. and China, with the IMF warning of the potential ramifications for years if tariff levels stay where they are. As all we've seen to this point, Joe, is escalation between the U.S. and China, though the Treasury Secretary telling a closed-door summit of investors that he thinks there will be de-escalation. He also openly admitted negotiations have not started yet.
Yeah, that's the curious part. But suddenly we had the Dow up 1,000 points. We've got the broad market up some 3%, despite the fact that, Kailey, nothing really has changed.
Yeah, and it's unclear who's going to be the first to pick up the phone, whether each thinks they've met the conditions in order to do that. And yet it does seem that we are looking at least at an equity market that is eager to cling to any sign of hope that this trade war will be eased in some form or fashion.
You could look at this, I guess, differently at the White House and say that at least we're not talking about Pete Hegseth as we were this time yesterday. They put him out for an interview this morning, and it seems like the news cycle may be moving on, but we'll get to that a little later with our political panel.
Yeah, he, of course, was in familiar territory, appearing on Fox and Friends, talking about leakers within the Pentagon and slamming the media for these reports around his use of a second signal group chat. But it doesn't seem that the story is going anywhere anytime soon. Markets certainly, though, are heading somewhere, and that direction is higher on the back of this Bessent news. So let's check in on that now with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Kailey. Lines, all of this coming down roughly 1 hour ago. The Scott Bessent rally with the Dow, the S&P, NASDAQ all surging, just about the best level of the day right now on the S&P. Up 135. That is an advance of 2.6%. Our Michael Regan's going to have a whole lot more on the markets for you coming up in just a moment. A 1,000-point surge for the Dow Jones Industrial Average, up 2.6%. And NASDAQ up 484 right now, up by 3%. The Russell 2000 index up 2.6%. 10-year 4.37% with the 2-year 3.80%. Gold now retreating by 1%. Was trading above $3,500. $33.89 right now on the precious metal. WTI West Texas Intermediate Crude $64.98 a barrel, up 3%. And Bitcoin risk on up 4%. 90,870, reclaiming $90,000 on Bitcoin. So bottom line here, stocks are pushing higher. This after Treasury Secretary Scott Bessent reportedly saying that the tariff standoff with China is unsustainable, and he is expecting the situation to de-escalate. Tesla will be the big story after the close of trading today. Tesla earnings, Bloomberg Television and Radio going to be all over Tesla as it breaks up now by 5.9%. Again, recapping a major rally underway. Big reversal from this time yesterday. The S&P up by 2.6%. Balance of Power continues right now, and so does our market coverage. Back we go to Washington. Once again, your hosts, Joe Mathieu and Kailey Leinz.
All right, Charlie Pellet, always tracking the market moves for us and the headlines that are driving those moves. Thank you very much. But of course, today is an example of when it's important to look beyond just the headline, Joe, and consider what else is in the story that you can find on the terminal online today as our colleagues break from sources in the room when Treasury Secretary Scott Bessent addressed a closed-door summit of investors on the sideline of the World Bank IMF meeting here in Washington that, yes, the current situation with China is unsustainable. He thinks a deal is possible. But perhaps the most important of caveats we could tag onto this is that he also told those assembled that negotiations have not started yet.
Yes, correct. I mean, you could read this headline a couple of different ways, and maybe one of, I guess, losing patience. That he refers to this as unsustainable. But the tariffs were unsustainable, which is why we got the reciprocal tariffs, and now this standoff is unsustainable, and the phone is not ringing, yet we find the markets in rally mode.
Well, and incredible that we also, according to our reporting, had the Treasury Secretary telling investors that there is effectively a trade embargo between the U.S. and China with tariffs at the levels where they are now, 145% that the U.S. has placed, 125% that China slapped.
I don't think he liked the word embargo, and Anne-Marie Hordern used it in their recent interview at the White House. It's interesting how the language evolves. We want to get to the bottom of what's Prompting this rally, though, Michael Regan joins us from New York, Bloomberg senior editor, with his eyes on the markets here. Michael, you just heard us walk through this. It doesn't feel like anything has changed. We have not started negotiations with China. So why the rally?
Yeah, well, it's clear, the market definitely did get a pop, call it maybe 40, 50 points on the S&P from the headlines about Scott Bessent's comments. But I completely agree with you. This is a very sort of thin gruel, as they say, to base a rally on. I would point out the market was up pretty good before those comments were reported. The bond market and the dollar exchange rate had stabilized a little bit. So I think what it boils down to is obviously we've entered into a high volatility regime market. And that means some days you'll see big up days, some days big down days, someday a little of both. One direction in the morning, the opposite direction in the afternoon. So I think a lot of today is a result of yesterday. We saw that massive sell-off in U.S. equities, more weakness in the dollar. Remember, the U.S. markets were open yesterday. A lot of the nations around the world, their markets were closed, however. So you get this low volume, low liquidity market to start the week on Monday. And you saw that big risk off move in stocks. So I think today is a little bit of the rest of the world getting back at their desks and reacting to that sell off. But again, Joe, this is what high volatility markets are like when you enter that regime. You can have a big down day followed by a big up day and even intraday swings that don't necessarily align themselves perfectly to the news catalysts that we see. So I do think Scott Bessent's remarks as they were reported did cause a little bit of a pop in the market. But as you point out, there's a lot of questions about them. And really, these were off the record remarks behind closed doors. Ultimately, as we all know, President Trump is the decider. And so you have to sort of discount these remarks from Bessent to some degree, considering that.
Well, Mike, just on the volatility you're talking about, while we're in this kind of regime or era in which we are seeing these dramatic swings, what signs will you be looking for that any dip buying is actually something sustainable versus a one-off? Like, how do we know that that's not what's happening today? Yeah,
Kailey, I think the technical indicators are useful in times like these. A lot of people like to poo-poo them. But if you look at basically the move in the stock market from the high in February, we're in basically a classic downtrend, despite these one-day rallies that are pretty big. So if you sort of connect the dots between the highs from our last record, we're still trading well below that line that's pointed straight down. A lot of other technicals, the moving averages, really presenting a bearish picture. So I think you need that kind of technical breakout, and typically that's accompanied by a fundamental breakout. Some market moving news on the tariffs, de-escalation, some deals being struck, some walk back from the Trump administration on how aggressive they want to be with the tariffs to really create that. So it's kind of a know it when you see it type of situation, when both sort of the fundamental outlook changes enough that the technical signs start improving and look less like a classic downtrend than we're seeing right now.
All right, Bloomberg senior editor Michael Regan, thank you so much. And on the subject of the fundamental outlook changing, let's talk about the economic outlook changing that we got from the IMF today as it downgrades its global growth forecasts, and big hit to the forecast specifically for the U.S. and China, given the circumstances with which we were just discussing. We heard from the IMF chief economist Pierre-Olivier Gourinchas about the forecast earlier today.
Beyond the abrupt increase in tariffs, the surge in policy uncertainty is a major driver of the economic outlook. If sustained, the increase in trade tensions and uncertainty will slow global growth significantly.
So let's get more into this now with Bloomberg International Economics and Policy Correspondent Michael McKee, who is here with us in Washington. And when we consider the uncertainty in this forecast, we also have to consider the time at which these forecasts were made. April 4th is what assumptions they were using, tariffs that stood as they were on that day. We have seen a massive escalation in the tariffs between the U.S. and China since then. So when they're issuing warnings about growth being downgraded for the U.S. and China, there's actually plenty of room for that to get worse, Mike.
Yeah, and that was their second go at estimating what was going to happen to the global economy, because they'd already started preparing. And then when Trump announced the tariffs, they had to throw all that out and start over again. They did several different scenarios scenarios. And the one that we are all talking about is what they're calling the reference scenario. It's sort of their baseline at this point, but obviously things are going to change because we have no idea as of today what the tariffs are going to be. Right. But you're right, they do forecast a big drop in growth, not only for the U.S. and China, but for the world. The U.S. takes it on the chin by almost a full percentage point, down to 1.5% growth this year. That's from their forecast in January. So in 2 months, we've lost a percentage point. And the Chinese, they say, will grow just 3.2%. And as you know, they don't seem to like the idea of going below 5%, even if they have to kind of massage the numbers.
Gornishaw says we are entering a new era. The global economic system that has operated for the last 80 years is being reset. How long does it take for a new era to be set?
Well, we'd all love to know. And part of the problem there is, what is Donald Trump going to do? And then how long is it going to take him? And then what does he continue to do? At some point, does he say, okay, this is it, we're going ahead with tariffs? At some point, does he say, okay, we've accomplished what we want? Maybe he makes trade deals instead of doing tariffs. So nobody really knows what's going to happen. I think that the bottom line for what Pierre-Olivier is saying is that nobody can trust the United States anymore. And it used to be that the U.S. was the lodestar. Everybody followed what the U.S. was doing. But now people can't do that, so they have to prepare. Central banks have to prepare. Legislatures have to prepare and try to figure out what works best for their country, absent any idea what the U.S. is going to do.
Well, on your point on central banks, Mike, it stands out to me that the growth figures the IMF released today, the worst since 2009, or since COVID, second worst since 2009, times at which we were seeing central banks respond to these massive economic issues by easing policy. And yet, at least for the Federal Reserve, they don't necessarily find themselves in a place right now where they're eager to ease policy because of inflationary risks that are out there. The response will be different this time.
The IMF is forecasting that inflation is going to go up in the United States, not much in the rest of the world, a little bit, because it'll be somewhat disinflationary since the economies of all these countries are going to slow. But in the U.S., we're going to slow, but we're also going to see faster inflation, which leaves the U.S. in this awful position that Jay Powell was talking about last week of, what do? Do you raise rates to choke off inflation, in which case you make the slowdown worse, or vice versa? So at this point, the IMF view was, we really don't know what's going to happen, but whatever it is, it's not going to be good.
Bloomberg's Michael McKee with us in Washington. Nice to have you in the Capitol for a couple of days. We're going to have a lot to talk about with Mr. McKee as we add the voice of Constance Hunter, chief economist, EIU. Constance, it's great to have you with us here on Bloomberg TV and radio. The IMF forecast that we're talking about increases the odds of a recession here in the U.S. to 40%, up from 27% in October. Where are you?
We're much higher than that. I would say closer to 80%. And that's because the level of uncertainty that we're seeing is so significantly high. I mean, it is higher than the global financial crisis. It is higher than when the U.S. debt was downgraded in 2011, and higher than any previous recession going back to the 80s when this index was created. So we think that means that there is a significant reduction in CapEx. We hear that from our clients. We also are starting to see signs that you're seeing discretionary spending pull back on the part of consumers. And of course, that leads to a vicious circle where you see fewer and fewer jobs growth, eventually a negative jobs print. And so our baseline forecast is for negative 0.1% growth for all of 2025 for the U.S.
So considering that picture you're painting, Constance, it doesn't look like a very optimistic one for the U.S. economy. I wonder what you made when President Trump yesterday spoke on True Social about the calls for preemptive cuts from the Federal Reserve. He obviously thinks interest rates need to go down now. Is there a case to be made for that view if there is indeed such a dour outlook ahead of us?
Well, as Mike McKee pointed out, and we've been saying, the U.S. is going to import inflation and export disinflation, deflation to the rest of the world. And so I think what we're seeing from the president is perhaps the setting up of a scapegoat or someone to blame, saying, oh, well, we wouldn't have this slowdown in growth if the Fed just acted sooner. And of course, whatever happens, we will never have the counterfactual. But we do know that if the Fed were to cut too soon, it would risk igniting inflation. We think that risk is somewhat mitigated because of what we're seeing in terms of the behavior of the 10-year rates, right? Even with Scott Bessent's comments today, we don't see the 10-year rallying all that much. And so if the Fed were to cut too soon, right, and that risk of inflation gets elevated, you're going to see 10-year rates go up. So it's not clear that that would actually help the economy that much, where it really could serve to unanchor inflation expectations. So we think not only is the Fed going to be so-called fashionably late, but we think given their dual mandate, they are constitutionally, or I should say congressionally mandated to be a little bit late, and they're likely not to cut rates until June or so.
Constance, you mentioned Scott Bessent's remarks earlier today prompted quite a rally. I just wonder what you make of what he said. Wall Street is finding a positive spin on this. The status quo here apparently not sustainable. But if the Treasury Secretary is calling for de-escalation, does that mean that the reciprocal tariffs didn't work?
Well, that's an interesting question. I would say it depends what from whose perspective and how are we define working, right? Like if you're China and and this is going to really hurt your economy and you've put on retaliatory tariffs and now the U.S. is saying we're going to walk back some of our side of the tariffs, then I guess from China's perspective, it did work. From our perspective, did it work? What are we trying to achieve? There's been a lot of muddled communication with regard to what are these tariffs trying to achieve? Are they a revenue generator? Are they supposed to reduce imports and reduce our deficits, in which case they would not be generating as much revenue? Are they supposed to bring manufacturing back to the United States or bring manufacturing to the United States? It's not clear that is necessarily one of the goals. And if it is, we import so many intermediate goods that are part of our manufacturing process that tariffs are not really going to help facilitate that occurring. Is it a Juan Perón type policy where we're saying we actually want to make everything in the United States and we're not going to be integrated with the rest of the world at all? We know that's not a terribly successful policy track to take. So it's kind of unclear when we say work, what is the ultimate objective of the tariffs and what is the ordering in which we should rank the various objectives that have been thrown out by the administration.
Constance, we just have a minute left here, but when you look at the bond market right now, what do you see and how worried about it are you?
I see an increase in term premium. I see the sell-off as being part of a global reallocation out of U.S. assets. And what we see day to day, of course, is the liquid assets. But we're also going to begin to see, and we are already beginning to see in terms of real estate, the selling of less liquid assets. And so that increase in term premium is going to prove, I think, very expensive if we continue along this direction.
All right, Constance, great to have you on Bloomberg TV and radio. Constance Hunter is chief economist at EIU, joining us here on Balance of Power as we consider this downgraded growth outlook and how it is timed with the words of Scott Bessent, though not technically on the record, not in public, not in front of the media, just sources saying that he views the tariffs with China as unsustainable. He thinks there will be a de-escalation. The problem is, Joe, no one is seemingly taking that first de-escalatory step at this point. That
is the problem. You have to pick up the phone and have a meeting at some point. Coming off our highs, so the S&P 500 still up 100 points or 2%. Our panel's up next, right here on Bloomberg. Make sure to subscribe to the Balance of Power podcast. Go to Spotify or Apple, wherever you do your podcast. Find the show and subscribe. You can watch us live on YouTube and listen anytime at Bloomberg.com.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are off session highs, but holding on to gains with the Dow, the S&P, NASDAQ solidly in the green. Treasury Secretary Scott Bessent telling a closed-door investor summit today that the tariff standoff with China is unsustainable and that he expects the situation to de-escalate. S&P right now up 95. That is a gain of 1.9%. Again, off session highs. The Dow up 724, up 1.9%. While the Nasdaq Composite Index is now up 338, up by 2.1%. Russell 2000 Index of small cap shares up 1.9%. The 10-year now at 4.39%. The 2-year 3.80%. Gold now down 0.5%, 34.06 the ounce. West Texas Intermediate crude up 2.6%, 64.70 a barrel. And Bitcoin now up by 4%, 90,810 on Bitcoin. Amazon's web services business is pausing some data center leases, this according to Wells Fargo Securities, with the e-commerce company potentially following Microsoft in reassessing the money it is spending on AI and cloud computing related investments. Amazon shares up by 4%, all part of a bigger tech rally. Again, recapping, S&P now higher by 95, up by 1.9%. Balance of power continues right now. And back we go to Washington. Once again, your hosts, Joe Mathieu and Kailey Leinz.
Charlie Pellet, live from New York with us here on the fastest show in politics. Thank you for being with us on the Tuesday edition here of Balance of Power. It was right at this time yesterday. We were all focused on Pete Hegseth, the Secretary of Defense, in the throes of some very difficult reporting over the weekend, a couple of hit pieces, you might say, that resulted in 4 people being shown the door, 4 of his nearest advisors alleged to be leakers. And it all, of course, centered around this revelation yesterday of a second Signal group chat in which the Secretary of Defense shared attack plans with his wife, his brother, and others on, again, a private phone, a private chat. He calls this old news, and Pete Hegseth, after a difficult day in the news cycle, showed up this morning on cable news for an interview on his alma mater, Fox News, Fox and Friends, to be exact, to try to make the case for his job at the Pentagon. Here he is.
I said repeatedly, no one's texting war plans. You know why I said that? Because I'm in the bowels of the Pentagon every single day. Just 10 minutes ago, I was looking at actual war plans of things that were ongoing or pending things to happen, because that's on a regular basis on classified systems. That's my job for the war fighters, for the President of the United States. I look at war plans every single day. What was shared over Signal then and now, however you characterize it, was informal, unclassified coordinations.
We're hearing from the White House press secretary as well. Caroline Leavitt is briefing the media, addressing Hegseth as we speak, saying that he's been doing a phenomenal job, reiterating that President Trump stands strongly behind him. Also saying that those who were let go were Pentagon employees who leaked to outlets in this room, she says, as she addresses those assembled in the briefing room, and said that they've made it clear that they won't tolerate people who leak to the mainstream media. So we want to get into this now with our political panel. Joining us today, Rick Davis, partner at Stonecourt Capital, Bloomberg Politics contributor and Republican strategist, alongside Democratic strategist Kristen Hawn, partner at Rokk Solutions. Welcome to you both. Kristen, obviously you are a communications professional, and I wonder what you make of the communication strategy here to make it about the leakers, but not necessarily about the content that they were leaking that isn't being outright refuted.
Yeah, I mean, they've said, the leakers have said it's unconscionable and they don't even know what they're being accused of leaking. I think that it's pretty rich when you have the Secretary of Defense who's clearly sharing information that could impact our service members and their activities and their well-being overseas, and so I think, you get a lot of conflicting information coming out of this White House. You never really know what you can trust and what you can't. Clearly, the president said himself that he stands behind Pete Hegseth, and Pete Hegseth is clearly speaking to an audience of one in the president when he speaks to the press himself. But when you have reports coming out saying there's, potentially looking for a replacement, I don't necessarily see that happening. But, it's not consistent over at DOD. And I do, reading and believe these reports that there's a lot of chaos over there right now because people don't know who they can trust.
So how did he do, Rick Davis? You're an expert in crisis management. Was it the right venue? Did he comport himself with the gravitas needed to move on here?
You mean the interview on Fox this morning? Yeah, I mean, look, he's fighting for his job. So he's going to go to the friendliest venue, his former employer, where he was a weekend host, and he's going to get a good hearing there. So Yeah, I think that he also is highly likely to be seen by the president, vice president, and the White House staff because they have that on all morning during the course of their day. So the reality is, if you're fighting for your job, the first thing you want to do is make sure you control the media narrative. It has been working against him for quite some time. This is the second Signal chat that has been released, and he's got to explain it away. So what does he do? He basically says, hey, I was just checking in with my wife and friends, and I gave him information that wasn't classified, so what's the harm? And if he keeps that up and the president backs him up, I think he can dodge a bullet. The reality is, if you believe what Kristen just said and what you're hearing out of the Pentagon, there's more to come about conduct as the secretary. And look, it's not like we're already not seeing a lot of disruption. They fired most of the Joint Chiefs in the first few weeks of the administration. And so it's been a disruptive environment in the Pentagon at a time when they have been needing to really pay a lot of attention to world affairs.
Well, and I guess it becomes a question of when we game out the scenarios of if President Trump were to decide he no longer wants to stand strongly behind Hegseth. Rick, knowing how much emphasis they put on Hegseth's nomination, how much potentially political capital they burned in order to get him confirmed by the United States Senate in the first place, considering there was a time at which his nomination was thought to be dead in the water. Is that a fight they're realistically willing to go through again for a replacement?
Yeah, it just depends on who the replacement is. There are a lot of qualified people who would sail through the Senate right now. Obviously, he had fewer qualifications, Mr. Hegseth, when he was going through confirmation. It was early on. And there might have been some question at the time as to whether Republicans in the Senate were going to show a little mettle and say, no, we have to have people at the head of these agencies, especially DOD, that have better qualifications, but they didn't. And so the door swung wide open. And we've seen other folks in similar circumstances with very little experience becoming the heads of important agencies and cabinet departments. So, and seemingly no real stomach at this stage to challenge the status quo. I mean, Congressman Bacon from Nebraska has been one of the only people who's been outspoken on the idea that communicating any kind of warring activity on a Signal chat is a violation of an intelligence regime that should be respected by our highest office holders. And he doesn't seem to be getting a lot of, I would say, support from his Republican colleagues, either in the House or the Senate.
Well, that's clear, Kristen. Where are Democrats on this? Where's the promise of a hearing? Or is everyone just watching from the sidelines?
I mean, I think you've seen several Democrats outspoken on this issue since the first major leak with the editor of the Atlantic. So, I think you'll continue to see Democrats talking about this, although we're focusing a lot on the economy. It's unfortunate that more Republicans aren't out there saying anything. I think that it's political because these members are still fearful of any retribution by this administration and the president himself as we head into elections next year. So better to just stay on the sidelines for them politically rather than raise their voices and say anything that might put them in the crosshairs, on the political front.
I want to mention some more headlines we're getting out of the briefing with the White House Press Secretary Caroline Leavitt, because she's talking about trade and specifically progress being made on trade deals. She says that the Trump team now has 18 proposals from different countries in hand that they are negotiating or meeting with 34 countries. But I want to point out China specifically and what she said on that, reading out a statement from President Trump, that they're doing well on a potential deal with China, that they're setting the stage for a deal. The ball is moving in the right direction. However, she had nothing to read out on any direct contact being made between President Trump and Xi Jinping. It does not seem that a phone call has actually happened yet. And Rick, this comes after the market, for at least a time, was swinging way higher on news that Bessent, Treasury Secretary Scott Bessent, told a closed-door session of investors hosted by J.P. Morgan here in Washington that the situation between the U.S. and China currently is unsustainable. What does it say to you if the Treasury Secretary is saying the situation the administration has gotten itself into is not a sustainable one?
Yeah, well, I guess kind of a declaration of common sense. I mean, we have 145% tariff on them. They got 100 and some tariff on us. It's basically an embargo of trade. And I think he's just saying that's not sustainable. And he's right. That's not sustainable. And by the way, we shouldn't want it to be sustainable. That shouldn't be our policy, is that we're going to let that sit there the way it is. It is destabilizing to our economy and into our position as a global trade influencer. So I'm glad to hear there's progress being made on these trade deals, because if you believe that the trade regime that Donald Trump announced was, I think, over the top, then you'd want these deals to be cut as quickly as you could and get back to some kind of a thoughtful trade regime. And so if our counterparties are saying yes to these things, maybe something that fits into that category. But yeah, I mean, Bessent also said this morning that there were no active talks going on with China. And now we hear, gosh, within just a few hours, the White House saying, oh, no, we're making progress. So, hey, boy, they are burning the midnight candle over there at the White House, moving fast.
It's a busy day, I guess, Kristen. In our remaining moment, I'm looking at the markets here. We did have a Dow Industrial Average that was up over 1,000 points. It's now up by 663. The S&P 500 was ahead by almost 150 here. We're up by 84. So maybe we're getting to be a little bit more grounded in the way we look at this. But the idea that tariffs were unsustainable drew the reciprocal tariffs, which are now apparently unsustainable. What's the White House say next here?
I mean, I think that they've got to figure something out. I think that, they're looking at an economic downturn, potential economic downturn, and their real concern, I mean, obviously their concern is with the markets and the business community, but their real concern should be the voters. And when this trickles down and has any negative impact on people's buying power and their ability to put food on the table and pay their bills, that's when the real hurt's going to come for this administration. Even if he's not running again, how does this look for the other members of the party who are going along with these efforts?
That's Kristen Hawn, partner at Rokk Solution, our Democratic strategist, and of course, Rick Davis, partner at Stonecourt, Republican strategist and Bloomberg Politics contributor. Great conversation, and thank you both for the insights. With breaking news before our eyes, we'll keep tabs on this White House press briefing. An important conversation ahead with Kaplan from Goldman Sachs. It'll be right here on Bloomberg TV and radio.
This is Balance of Power with Joe Mathieu and Kailey Leinz on Bloomberg Radio and Television.
Thanks for being with us on the Tuesday edition here on Bloomberg TV and radio with our eyes on Wall Street and up day, though we're off our highs of the session. The S&P 500 up 93 points, almost 2%. The NASDAQ is ahead by a bit more than 2%, 340 points following the comments on trade with China that we've been discussing, Treasury Secretary Scott Bessent. With this backdrop on the markets, we have an opportunity to bring you a fascinating conversation. It's underway right now at the Bloomberg Sell-Side Leaders Forum in New York. Our colleague, Bloomberg's Eric Schatzker, sitting down with Kaplan, Vice Chair at Goldman Sachs, former Dallas Fed President. Let's listen live on Bloomberg TV and radio.
Your responsibilities, and to the degree that they've been articulated for you, and to the degree that you've been able to formulate them yourself about your objectives.
So it's funny, David and I talked over a year ago about this concept, and it's held pretty true. I spend 2/3 of my time on clients all over the world. I'm an investment banker by training, but I spend a portion of my time in investment banking. I spend a lot of my time with trading clients. I spend a lot of my time with asset management and private wealth clients all over the world. And then because of my leadership teaching background, I will teach a leadership class in between client meetings somewhere in the world in Goldman Sachs every week. I mentor and coach. I annoy people. I try to coach business leaders, division heads of the firm about things I think we could do better. And that's pretty much what we agreed coming in. And so far, it's been a great experience. It's a 50 billion revenue firm with 50,000 people. So the pool is deep, and there's more to do than I can do. And it's been a fabulous experience so far.
One of the things, Rob, that I've always appreciated about you and talking to you is the systematic approach you take to studying problems. I'm assuming that this started in your earlier days at Goldman Sachs, but no doubt you perfected it while you were teaching at Harvard. We're quite clearly in the midst of major policy-driven structural changes in the U.S. economy, both domestically and internationally. Everyone in the room is wrestling with the implications of these changes. Give us your framework for how to think about this.
So one of the things I brought to the Fed is a focus on structural drivers. I'm a business person, not an economist, and business people, as most of you know, focus on structural drivers. You look at cyclical factors and data, but ultimately those come as a result of structural drivers. There's 5 big structural economic changes going on right now. That's a lot for any point in time. What are the 5? Number 1, the administration is trying to take what they perceive as an over-leveraged U.S. government. It's gone from mid-70s debt to GDP pre-COVID to now over 100%. And they come into this, into the new administration wanting to deleverage, to take 6.5–7% of GDP deficits lower. This is where you can debate the tactics, but this is where DOGE came from and a number of other things, but they would like to deleverage. We'll see at the end of the day how far they get without carving in entitlements. They're doing a regulatory review of every industry with the hope that we can improve productivity growth. 3 ways to grow. Grow the workforce, improve productivity, and leverage up. We've exhausted leveraging, and so productivity growth through regulatory review is one driver. They are trying to do a overhaul of the energy ecosystem. So what does that mean? They're trying to increase global oil production. They hope to do it domestically, but it's not so easy at lower prices. But they're pushing OPEC and Saudi Arabia to produce more. They're going to make it easier to run a refinery, permit a refinery, do transmission. So why are they doing this? Because they're sensitive that there are tens of millions of families in this country that rely on an income of $50,000 a year or less. They've lost 25% purchasing power. They're struggling to make ends meet. They help this administration get elected. They want to show them a tangible benefit. 4th big change. One of the reasons the U.S. economy has outgrown the world, one of them is, I would argue, is very high levels of fiscal spending and special programs. But the other reason is we've had a surge in labor force growth, heavily due to immigration, much of it undocumented. The risk of stating the obvious, they are shutting that down. They haven't yet ramped up legal immigration, but hopefully they will. And they are also working to deport, at a minimum, people with criminal records. The issue is, which we can talk more about, there are many millions of workers in agriculture, in construction, other industries who are undocumented. There are probably 13 million green card holders in the United States in addition. And I would say at a minimum, the undocumented workers are very unsure of their status. I'm hearing from businesses they're not, in some cases, coming into work. They're not sending their kids, in some cases, to school. They're certainly not shopping. It's having a chilling effect on the workforce and probably on consumption. So that's the 4th one. And then it gets to the one we're getting all the airtime, tariffs. And suffice it to say, I had thought going into this, if you want to level the playing field, which I think makes sense, fairer trade, better access, and you want to encourage reshoring, the challenge is You'd probably carve out Mexico and Canada because that allows you logistics and supply chain arrangements, which allows people to domicile here. You might even carve out poorer countries who don't have a hope to buy our goods. Vietnam might be an example where their GDP per capita is $4,000 a person. They tend to do lower value-added manufacturing we probably don't want here, and they're going to struggle to buy U.S. goods because their GDP per capita. And you would center on a handful of countries you really want to rebalance the arrangement with. We've instead created tariffs on everyone, and I think we're now negotiating deals one by one, but it takes time to negotiate a trade deal. And it's very critical that there are many things we do with China. Yes, they're an adversary in certain things, they're a competitor in others, and there's some places we're inextricably linked. Agriculture market for our farmers, rare earths back to us, intermediate goods is 40% of the imports. And so I think what you're seeing now is a working through one by one, how do we lower these tariffs, because U.S. companies right now are struggling to do all this at once in an abrupt way. And so that's the process we're working through. But those are the 5 big changes. And if that sounds like a lot, it's because it's a lot. And it's a lot going on at once.
There is more going on. Are you leaving those things out because they are not big enough or because they amount to noise?
So the other things you're referring to, we'll just say what I think you're referring to, the things going on with higher education, other battles away, yes. And I'm always careful in my previous job and in my current job to stay away from the political parts of these. But the one thing I do see around the world in pools of capital, which we talk with regularly, is countries that maybe a month ago, a lot of the uncertainty had to do with the abrupt nature of the tariffs and adjusting to it. I think it is broadened out a little bit where countries and investors around the world, including here, are asking, what's the institutional makeup of the United States? What will it be in the next 3 or 4 years? And whereas they came into the year saying, if in doubt, I want to over-allocate to the dollar, at a minimum, they're saying, maybe I want to be more balanced. And even in some cases, they're saying, I want to reduce my exposure to the dollar. And we're seeing a little bit in weakness of the dollar, rallying gold, 10-year Treasury backing up. And I think all this is part of a mosaic that we can work through, but it's creating this amount of uncertainty, including institutional uncertainty, is affecting asset allocation and access to capital for the United States.
There's no question, Rob, uncertainty is the word on everyone's lips. You hear it perhaps now. I haven't used the Bloomberg and the AI tools that we've been given to determine yet, how much more often we're hearing it, but anecdotally it seems like never before. You mentioned earlier, you told us, in fact, earlier that you spent about 2/3 of your time with clients. What is the mood in the C-suite and in the boardroom? Would you go so far as to say it's one of sort of paralysis?
I wouldn't go that far in that, listen, we started the year, it's interesting, because a lot's happened in a short period. We started the year with great enthusiasm and optimism, and I think the regulatory review was a big part of that. And the company said, I'd love to improve productivity. We're sort of being constrained in all these different ways, and I'm excited that we're going to be able to be freer to run a capitalist business. A number of these changes happened, the tariff uncertainty, and I'd say businesses by and large, because that's sort of the DNA, including me and most business people, you want to be optimistic, cautiously optimistic, but they're struggling right now to figure out how they want to adjust either supply chains or their business or their access to workforce. And they'll work through this. Business people adapt. Capital allocators also adapt, but business people will adapt. I think to the extent we negotiate, for example, tariffs down to mutually zero versus, say, 10% or 20% with these various countries, it will make it easier for them to adjust. And right now, they don't know what the end point is going to be and the timing of it. And that's why they're wrestling to work through it. The ones that are wrestling the most, last comment, is big businesses have a lot more levers. Small businesses, we're hearing, are struggling in that they don't have a lot of levers and they don't know how to replace the supply they've gotten, but they're afraid they're not going to be competitive. And many more small businesses we talk to are more nervous at this moment about their business failing and certainly not being able to employ as many people as they employ, or certainly not being able to employ them full time.
Part of the problem is that now there are, we presume, because we don't have a ton of visibility into the details, but we presume there are multiple negotiations going on with multiple countries on multiple timelines.
Right.
David Solomon, in fact, was saying earlier today that the delay in tariffs didn't decrease the level of uncertainty. In some ways, the delay increased the level of uncertainty. So with the feedback that you've been getting from clients, what is it that business leaders, CEOs, members of the board will need to see to feel a degree of certainty, a degree of confidence, such that they're more willing to transact, they're more willing to commit capital, they're more willing, for example, to do what they're largely not doing now, which is invest in CapEx?
So CEOs are watching the news, and their teams are watching the news more than they're historically accustomed to. And by the way, this administration is talking to businesses very extensively. So they're giving their views. But depending on who they are, what's an example? Many businesses want to see the relationship with Canada and Mexico resolved, because they need the logistics and supply chain arrangements. And if they're going to change those, it's not a 30-day process. It is an extensive process to move them. They're watching carefully the negotiation going on with Japan. And so they're literally just, I think what would help businesses if they're encouraged, listen, they're also aware it takes a long time to negotiate a trade deal. Trade deals are very complicated. Normally, in the past, it might take 9 months or a year or longer to do a trade deal. So they're watching, maybe there's going to be an agreement in principle, lower the tariffs, then negotiate the details. But I think the more progress that's visible over the next couple of weeks or 30 days, it will make people think that more progress is coming. But every company I talk to has a little different supply chain arrangements, whether it's with Vietnam or with Canada or Mexico or elsewhere. They're ready to adjust, but they're not sure how. The one thing they do say is it probably isn't at the moment, unless there is really very high level technology. It's hard to imagine replacing all of it in the US and being globally competitive, and that's the key. Every question, every CEO wants to, whatever they're going to do, it's got to be globally competitive.
That's Rokk Kaplan, vice chair at Goldman Sachs and former Dallas Fed president at the Bloomberg Sell-Side Leaders Forum, sitting down with our colleague Eric Schatzker. If you want to continue to listen to that conversation, you can do so at Live Go on your terminal. But him, of course, speaking there to tariff and trade uncertainty, Joe, which we're going to have much more to talk about at 5 p.m. on the late edition, given the words from Treasury Secretary Scott Bessent that were reported earlier.
Wouldn't know there's any concern by looking at this market, but of course, we've come off our highs of the session. We'll have a lot more. Meet you back here at 5 p.m. Eastern on the late edition of Balance of Power, right here on Bloomberg.